Hey, welcome everybody. And we're back again. Another trading week. Started it, we already started yesterday. But we're back live today with the Mohawk Forex scalping team. So back earlier start because we've got the US retail sales news thing up in about 10 minutes time. Be here, 8 minutes. Be a good one. Retail sales year on year, month on month. Just give us some nice scalping on the US 30 or gold or pounds, whichever one you want to take your fancy on. Thank you for joining us today. We're going to trade this news event. We'll do a bit of scalping live, and then we're going to trade the MI Open, and then we'll finish off by hopefully waiting for the NAHB housing market index to see if there's a trade before we get out of the markets and wait for the chair. Powell, his speech later on. So interesting day. Good start so far. We did some nice scalping this morning on DAX. Did about a dozen trades or so. So we're in the green, and yeah, looking forward to this one. So looking at US 30, it's a nice bull run this morning in London. We just got ourselves a bear signal, but we're sat on some support, so this could be a nice break if the news is better than expected. Because remember, any news pre-market, we expect usually the US 30 to go against news. Not always, and like I say, this is why we wait for confirmation with our stochastic and our RSI to give us the direction. But usually if the news is better than expected, we will get a drop. If it's worse than expected, we'll buy, and then the reverse on the open. That's the system we look to. Yeah, and if it goes the opposite way, we go with it. You know, that's just what we end. And looking at the structure at the moment on our 3-minute time frame, that would be perfect if we get drop down to this next level here at 32576 or so. Stochastic is flipping between red and green, not taking too much notice of that at the moment, really looking at the price action. So we'll wait and see. So also I've got the NAS on the chart, and again pretty much the same kind of pattern. That again looking for a break, is against heavy resistance and some support on our breakout line. See how that goes. Trading with IC markets, 1 to 500 leverage today, and we're trading with about a $6,000 trading going for, and I like, yeah, for learning how to do all this and joining our group and everything. Obviously go to the website www.mohawkforex.com. all the information on how to join and become a VIP member of our Discord group, where I post setups, chat, teach one-to-ones. We try and get people up to speed on true scalping over time frames, like 3 minutes, and you get access to our X trading system, our unique trading system that all just keep a with a group. Find, scalp, true scalping.
Right now, you were seeing some tourism happen with Europeans coming to the US. We'll need that Asian traveler, but the product innovation is
going to wait now. We've got about 5 minutes to go.
When newness is out there, you've seen it from LVMH with their brand.
Trade.
Happening with Tiffany's. You've seen what's happening.
Broker make good, and we're on US 30. Right, lot sizes. See, lot sizes are going to depend on your account size. I can teach you all that inside the trading.
Especially as more consumers do start to
5 lots or 0.5 for most brokers. 30 that will give me 50 cents a pip. That's what I'm looking for. 100 points on TradingView could give me about 50. So I sometimes get out before that. I'm not greedy. See, so we might not even get a move if the news is pretty close to consensus. We might not get a move, but all these 4 news events are all tied in. We'd like them to be same direction possible.
I mean, there's work to be done there. Amazon, the
narrative
was 2 and 3 years ago that Amazon was going to take over retail and the consumer.
There's a few Fed speeches today. Tonight with the VIP group, I'll be trading the API crude oil. Well, end of new session, but
we're seeing the shift of a return to stores from digital sales that's helping the physical store retailer.
Trade later.
digital sales are moderating, and that's
Bloomberg, as always, find out what's going on.
You know, to be honest,
Too much.
I've never been in the store. But you know, and Dana will be dazzled by this. I actually
On
watched
in case some major happens, might catch us out.
Yeah, how did that go?
He went bankrupt like 3 times, and every time he came out, he
Like I say, you just see
revolutionized what he
30
did
there.
out of Spain.
Sure.
And it was always with drama, John. And I guess that's what it is. I don't get it.
Dana, I'm convinced.
Those zones when they pop on your chart, that usually means or resistance zone.
This was all a joke. But
Historic.
I just don't get it.
Saves you having to zoom out the charts and all the way back, and I can do that because so I can zoom in and trade like this. Please tell me, zoom out, there'll be levels 2 or 3 times. It's respected.
They're basically creating something you need to see. And frankly, there's a difference between heritage and authentic luxury, like what you have
about
with
3-4 minutes
the goods,
go.
and there's a difference with what's happening now that is in demand because of limited
Everyone
supply.
uses, of
That's what
course.
some of the brands are doing.
Dana, what is your universe?
Retail sales, must trying to get a discount on Twitter. Bad.
Do very well, but also don't forget what China supplies.
Sales,
Every
way the Fed
is looking to diversify their supply.
Okay.
rates,
To get the goods is key.
Brilliant.
later on, obviously.
Awesome. Dana Towsey of Towsey
Which if
Advisors.
you do stocks, higher show, the opening, brain in picture, oil heat, 7-week high. Yeah, pretty positive market, but it just depends on this retail
the
news.
idea that women spend so much more than men. I just listened.
Who is insinuating?
Got a couple of minutes to go. Good luck, everybody. Just trades.
I mean, that's typically the stereotype.
Session, quite a US session, but you know what I mean.
I would never suggest such a thing.
Something away. It's a positive, it's back in positive territory in Asia. That's because of Shanghai coming out of lockdown. Yeah, Europe is also pretty positive at the moment. Nice trades this morning on today. A few. Yeah, with 16 trades this morning. Green, touch wood, he says. Good. Happy with that. Yeah, so the Dow's about break even, SP is a bit low, and NAS is way down at the moment. It'll be interesting to see if this retail news actually does anything or not. Countdown now, team. Good luck, everybody. Remember, don't just go with the results. Now we want to wait. Oh, we've had a nice break on the points of interest line, which is our Fibonacci and grid. So we want to wait for that to break. Uses worse than expected. We could get a pop back. We're outside our breakout zone thing.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu.
Back to later and
Rame. Sekarang ya ada 1-2 itu ada, tapi
sell, but
nggak kayak dulu. Kalau dulu rame sekali.
market structure wise, it
Sekarang
would.
dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu
Get ready.
dia nyampe
Sat on support.
1,5
9 seconds.
dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
Okay, so it's better than expected on the X autos and X gas. Waiting for the year on year is expected. So it's not quite positive that it is as expected. Year on year will also. Oops. I wonder if we're going to get a sell now. Let's have a look. Buy. Trap between these two zones, so you don't want to be taking a trade on this yet. Sure. And it's all, there we go, so it's all pretty much green. I'll just print that. So we're looking to take the reverse on the sell 30. Obviously, I want to see it break that zone for
from businesses most influential and instrumental.
And that's the way you run good risk management.
the fact that they're same area.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg
Good.
Television and Radio.
See what this does. Like there, we've got a mix. We've got a green stochastic, a red RSI. So we've got a mixed bag, and you can see we're caught in a zone here. Kind of suicide trade at the moment. But I would expect this to come down. So gone. Breaks his interest. We fell away. Low. No need to panic.
Seconds away from economic data in America from New York City this morning. Good morning, live on radio and on TV. This is Bloomberg Surveillance. Equity futures up by 1.5%, there and thereabouts on the S&P 500. On the Nasdaq up by 1.9 with some economic data. Here's Mike McKee.
Go.
Good morning, John. Well, it looks like Americans are still spending, if not a little bit less than they had been anticipated to spend. With
Blue zone's flashing on now, so just wait. Just wait.
Month-over-month basis up 0.9%. That's stronger than the month of March, which had been
Like to trade the manipulations. I'm looking for
it's a
the
little
sell.
bit less than the 1% that was anticipated by economists. The retail sales ex-auto is up 0.6. That is half, roughly, what it was in March. And retail sales without auto and gas up 1%. And that's important because gasoline.
Remember, we're in a bull signal, so still bullish. Below the trend line, below our red breakout line. We've just got this hold to holders here. So against ranging, don't take a trade. 8 seconds to the next candle. Let's see.
We're down, actually down 2.7%. So that's
Just
interesting.
about to take a sell.
We had thought
Going to be a bit sure.
prices had started to go up
Going to
again,
break that
but,
zone. RSI has now gone red and stochastic.
steady during the month. The percentage change isn't as much, but
That's
here's
gone
an
green.
interesting thing on a,
Like I say, just don't jump in. Where you have to be patient. Which is I want to trade it. Usually we do a jump timber now. It's not worth it.
You can see an inflation impact there. Couple of other
We know what we're looking for. We know
here.
ideally we're looking for the sells to take the reverse.
Appliance stores up 1% after a decline of 5.2%. Maybe that's a little bit of a rebound in what people are buying out of housing. The clothing and clothing accessories up 0.8%. Non-store retailers, this is the group that includes Amazon. Tom was talking about Amazon, 2.1% higher. That is a bigger change than the prior month, which was just 0.4%. And food services and drinking places, which is the one we always talk about in honor of Tom, up 2%.
Of course.
After 1.9% the month before. So
Keep
that
watching.
little extra he had at the hotel the other night.
Contributing as always.
Contributing as always.
Thank
Doing his best for the
Thank you.
American
Working on it.
for the American economy.
Equities up nicely here, up 1.3% going into the print, coming out of it too. If you want to see a move, it's at the front end of the yield curve. 2-year yields are higher by 8 basis points. I think we can round that one up now and call it 9 basis points higher at 266 on a 2-year. Seems to me we're trading off the back of, Tom, the ex-auto, ex-gas number, which was an upside surprise, the control group, an upside surprise, and some really decent revisions across the board.
Yeah, the revisions to me are a huge deal. I look at this like on a 3-month moving basis, so the revisions really matter to me. And John, what's important here on the celebration of the 2-year yield taking a breather, we're halfway back to that 280 level.
266 on a 2-year. That's the question, Mike. You take the data, what does it mean for the Fed? The heat's still on, right?
The heat's still on. It does suggest that we are going to see ongoing strength in the U.S. economy, which is what the Fed wants to see. Jim Bullard, the St. Louis Fed president, just out with some headlines. He's speaking this morning, one of 6 different Fed speakers, including the chairman. I'm not speaking today, but, well, I am speaking right now. And Bullard's saying he expects that household spending will hold up because of the strong job market. He thinks that the tighter Fed policy is already having an effect, and I think he's there talking about the housing sector. And he does not expect recession in U.S. or Europe, even though he said that Europe and China are risk factors for the United States right now.
Mike, before we let you go, we've been talking all morning about how good news may be becoming bad news for the Fed, that basically these numbers coming in strong, and frankly, the upward revision from a negative to a very decidedly positive level for the prior month in the core group, in the comparison control group, really gives the Fed more incentive to hike further. How much pressure does this really put on them to make the 50 basis point moves and then follow it up with additional ones later in the year?
Well, since they've already said they would do 50 at the next two meetings, it probably doesn't add a lot to them. What they'll want to see is where they are in July with retail sales once we get through the next 2 months, the May and June numbers before the July meeting, and then we'll see where they go when they get to September, because at this point, we know the economy is strong. It's a question of when does that additional weakness we've seen in housing because of higher mortgage rates bleed over into the rest of the economy. Jim Bullard suggesting it's not going to a whole lot, but we'll have to see.
Mike, thank you, sir. As always, Mike McKee, breaking through the data. Upside surprise, Tom. Equity still elevated 1.4% on the S&P. Yields pushing higher on 10s by 5 basis points, on 2s a little bit more. Speaking to the Fed, as Mike echoed, a Fed they're still facing a heat a bit here.
What's changed through the morning, folks? And we've been looking at oil 115 now down to 114.49 on Brent, but all of a sudden 2-year yield is front and center with a 7 basis point move. Dana Peterson provides wisdom now, chief economist at the Conference Board with their heritage of study of the American consumer. Dana, I know you're going to tell me all consumers matter, but which consumer matters to Jay Powell? Is it the Walmart consumer, the housing success Home Depot consumer, the luxury consumer Dana Telsey was just talking about? Which consumer matters?
Well, you're right. All consumers do matter, but I think for the Fed's very concerned about your lower and middle income persons who are struggling with higher inflation, whether or not they're going to start pulling back in consumption because prices are rising. They're also concerned about young millennials who are looking to buy that first home. And certainly as interest rates are rising, it makes it more difficult for them to get out there and acquire that home.
Dana, we're seeing people start to re-leverage, perhaps not so much in the home front, but definitely with credit card spending. We've been talking about that all morning. How concerned are you about this actually triggering more action from the Fed, or perhaps just padding numbers in a way that is unsustainable for the longer term?
Well, I think many people are starting to shift their buying habits. Indeed, our consumer spending confidence survey shows that in the present situation, people are still pretty optimistic. But looking ahead, they are saying that, look, they're starting to buy cheaper products. They're driving less. Maybe that's
disappointing. I'm just topping my coffee up there. Still with you, but yeah, nothing, no move yet. I mean, again, this is all risky. There's a few pips in this, but you really are gambling in and out. Could have got the sell on the reverse. The news came out 27 there, bottom of that candlestick, but could have probably got that spike, but I want to wait for the move. So again, retail sales hasn't really touched. Did it touch NAS? Let's have a look.
Dana, you pointed to
NAS was the one. Look, see, there you go. You pick the one you want to trade, but that was a better trade.
People are feeling about paying these high prices, but when it comes to retail sales data, they're coming in strong. When it comes to Home Depot, came in strong. Walmart is its own story.
Bear signal, that wick down was your retail sales, so it was a good sell on NAS if you took that. Well done, everybody.
Our last consumer confidence survey, the president's situation showed that people were still in great spirits. The labor market.
Remember, we always trade the reverse.
Wages are rising, but the expectations gauge continue to flag.
As you can see, that's what happens. But now NAS is trapped in a. And so is US 30. Now, if we get a bounce off this trend line, then we could be in. So we'll just leave this here and watch. You see, stochastics now green, and we don't take a buy unless the RSI is also out of our neutral zone and above our average baseline, and then price action also will have broken that trend line. So it's a sell if RSI dips down, stochastic goes red, and we can trade this gap here at the moment. I mean, that's enough, 10 pips now. It's risen enough for us to take the sell. At the time when that sell came out, look, it was so close to that minor support level that it was a risk. It could have been a win, it could have been so quick that you might have missed it, and now you'd be in drawdown. So always better to wait. There's no harm in missing a trade because there'll be others. We know that. We've already done 16 trades today. There'll be others to come. It hasn't moved as we thought it would. You can see it was all pretty much, maybe because we had a month-on-month expected and they got it bang on. Maybe it could have been that.
Later on this year.
Market's gone, hey, we don't need to do anything.
At the moment, Dana Peterson of the conference board. Lisa, this just goes back to a conversation we have had all morning. The output numbers are decent if you look at retail sales. Yeah. We're told repeatedly that consumer household balance sheets are really, really strong. And for that reason, people like Michelle Meyer of MasterCard, Matt Lazzetti of Deutsche Bank, I can think of others, Mark Cabana of Bank of America, think the Fed has to go further than many others believe.
Right now, the tolerance to higher rates seems to be a lot higher than some people might want, because it means that the Fed has to go further and really raises a prospect of that downturn. And this is the reason why it could be consistent that people believe that the biggest tail risk is the Fed hiking more than expected, but not worrying as much about the recession in the near term, but over the longer period, yes, because frankly, that would probably trigger some sort of downturn. And that is what a lot of people are trying to bake in to some of the pessimistic views that we're seeing expressed in markets.
I will say, Bramo, we've got to think about where the states are landed. This is numbers for April. We're talking about earnings from back in March. A lot's changed. March through April, into May, going through this summer. Things are going to get harder in the view of money.
Things are going to get harder, and it's also important to keep reminding everyone that retail sales are a nominal basis, right? So this means that on a real basis, they are negative. They are going down. We saw that with Home Depot, that the total ticket numbers were down by 8% or more, but in terms of the volume. But when it came to the revenues, they were up more than 11% because of those higher prices. At what point does that bite the real economy?
Chairman Powell, Tom, coming up a little bit later this afternoon. The amount of Fed speak we've got through the day is just phenomenal.
Oh.
What are you looking for?
I'm looking for how many times. It's going to be a drinking game, John. After Arsenal losing,
what is it?
I'm ready. Whoever's is data dependent. I mean, come on.
Is that your new drinking game? You say it all the time.
Look, I'm in the camp, and I had a wonderful conversation years ago with Richard Berner, who worked at Morgan Stanley.
Tell us about it. We've got 30 seconds.
John, just real quick, they're talking too much. Am I wrong on that? There's just too much communication.
The Fed officials?
Yes.
Most people would agree.
There's too much chat. It's like this show.
Are they all talking too much? But Tom, to be clear, is it all of them, or would you like to hear from just one person a little bit more often?
I'll leave it to a pro on that. I'm not sure.
Okay.
You know.
But they're data dependent.
I mean, when Loretta Mester speaks, I lean forward.
They're data dependent.
They're data dependent.
They're data dependent.
Excuse me.
They're data dependent.
They're data dependent.
There we go. Futures on the S&P up by 1.3%. This is Bloomberg.
They're data dependent.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Elon Musk is casting more uncertainty over whether he will actually buy Twitter. Musk says he won't move ahead with his $44 billion takeover unless Twitter can prove that bots make up fewer than 5% of its users. Musk said he believes there are far more fake accounts. Meanwhile, Twitter says it is committed to completing the deal at the agreed upon price. The US Senate has overwhelmingly voted...
Oh, wait, look at those candles. Look, these are the candles. This is good for this. I mean, to learn about candlestick patterns, even with Hakanashi. You just don't want to be trading these kind of Doge. There's just no movement. There was the move. It went up, it went down. No real big move yet. You can see we're at the top of a big bull run. Broke a high. Now we're just waiting to see if we're gonna push up higher, or I'm hoping breaks this zone and we're down. No trades yet. Like I say, I've already done 16 this morning. Already the green. We don't want to risk making a mistake by trading something that isn't there, and there's no trade there. We've got this industrial production. This is a medium impact news coming out year on year, and the Fed speak all in around 25 minutes. Now this might kickstart, you never know. Sometimes the medium impact news events better than the high ones if the market has gauged the high ones right. So high expected figure, it's positive for the dollar. So nothing standing there, so it's expected to be lower, 2%. This might do something. You know, you always need like a little catalyst, little trigger. doesn't always have to be these high impact new events. If the market gauges that one month one, put it bang on roundabout. So we go, look, and now here's a move. Here is a move going in the direction. Like I say, the news now is over. That was the little sell on the news there. Now we're looking RSI going grey. If we break the zone, finishes up zone, we've got 2 minutes, we'll be taking a buy. Looking good. Measure the gap we've got green, we've got green. Oh.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the...
Hey, there you go, done. Hey, we've got our first trades. Well done, everybody. Trading that. We got in. Why did we get in? Because we had a green confirmation in the RSI, we had a green stochastic, we had a candle break above our zone, and I went in for a quick 100 points, and I got 3 trades away there, and we got 32, 32, and 16. So we got about $100 there.
Who inhales this suit every second, 24 hours, 7 days a week, 30 days in the month, and for years.
In and out.
We are dying slowly, but
that's the first trade. Thank you. They're the setups you want. You want stochastic pointing up, the RSI breaking the neutral zone, candle staying above breakout zone and blue zone. The only iffy bit was that we haven't broken our average line on RSI, so we might be able to go again yet. About 30 seconds. That's why it's good to get in and out and repeat and go again rather than hold, because you pull back now and you'll be thinking, oh my god, it's going to go red. So take the money and reload. So we'll go again on the buy here. It depends on this next candle.
Tesla will be in the pole position to dominate.
So we've got 9 seconds. Let's see if this stays above our baselines. You can see it's sat right on it. And RSI can creep above. So nice push up.
When you think space, you probably think
Wick down a little bit.
One space agency that travels under the radar is ESA, which is surprising considering what the European
Yay, we're in and out again. Brilliant. Well done everybody again, and we got 1, 2, 3, 4. We got 4 trades away on that, and we got another $100. 25, 22, 12, and 12. So yeah, brilliant. And that's all you need to do. Proper true scalping. Go for the green.
We are going to have to learn to live and work off-world in a different way.
You can hold if you want. Like I say, some people enter the trades and hold until the stochastic goes red. That's fine. I wanted to get out because I want to wait for the average, the RSI to break average. Like, no, this is can be support and resistance level for the RSI. That's why I was in and out, not holding. If the next candle, the RSI clears this and we're still pointing up, we can go again on the buy.
Crypto, you have a world of young people.
So again, you have to take everything into consideration.
And their own culture.
But that was good. That's 8 trades we've completed there. And we're almost 10% for the day of our account for the open. You can see, look, the RSI, how it just dips. If we just want it to ideally be above our average line, because it can fall back into the neutral zone. This candle can pull down and it can be sat on this blue zone of support. So just wait and hold now. Got a minute to go, look.
Most forecasters have the real economy growing at an above trend pace in 2022 and also in 2023.
That's nice trade. Like I say, we were looking for the sells. The sells really didn't happen. I mean, that was a flash scalp, and then we were certainly ends up breaking our zone and it being a buy, you know, and the news was better than expected. So yeah, it's just, you know, that's your market manipulation. Here's your true move, you know.
Eventful day Fed speak. We'll continue forward to this on television and radio through the day. Mr. Bullard of St. Louis speaking at the Energy Infrastructure Council, many others to speak as well. We've got a busy 20 minutes for you to set up the beginning of the markets here with futures up 60. VIX comes in under 27, 26.68. On Walmart, on Home Depot, Kriti Gupta. Kriti?
Yeah, Tom, as we see retail sales on a macro basis actually better than expected, it's worth looking at the divergence between Home Depot and Walmart, but that's not what I do in my chart of the day. I look at Home Depot relative to Walmart, this idea of consumer discretionary spending relative to consumer staple spending, which of course is Walmart. We also know that they love to look at their everyday low prices, which kind of becomes this beacon almost for
there you go, look, see, there's my, this is what's good to watch. Look at that, case in point. It's our average line and dips down, you see. Now we're back into the neutral zone. So that's why if you're going to do these moves, don't be greedy, be in and out. We didn't have every confirmation. We had one confirmation, we had two confirmation, but we just were back at our average. Now we pulled back. That doesn't mean the buy's over, it just means if you're in a buy, you're going to have to accept some drawdown while it bounces, hopefully off the trend line and your breakout zone to come back. If it breaks here, drops down below, then obviously you're out of the trade, and then you need to sell instead. Loss. So again, that's why, you know, I like to hold for that 50 to 100 points, 5 to 10 pips, and that's it. Again, it's an opportunity to buy low. So again, but you just want to, you want the RSI really to be above. And as you can see now, stochastic's just gone red. If you was in a buy from here, you'd be about break even now. That's why I don't always hold stick going red. You know, I look every trade individually. Enough a gap there to take the profit and get out.
Is he suing Morgan Stanley here for letting the beans?
Now obviously if stochastic stays red, RSI pops out of the neutral zone and this candle breaks below our breakout and trend line, then we're in for a sell. And we're coming down to where we previously had a level about here. And again, you can measure that breakout line and go, okay, that's probably 15 pips. That's probably worth with spreads. It's worth doing. And now that's our course of action. Looking for a W, bounce up, sell, and also, but the candle has got to not to be flat on this breaking on.
This is not Martha Stewart or anybody else.
1 minute to go.
Trading where it's pretty much cookie cutter. Don't you just go back and look at the emails, look at the transcripts?
So we've got that little move now. 6 minutes to go till the 2 p.m. We usually get a move sometimes.
Time this happened that Archegos really even thought that there was anything amiss or anything that the Morgan Stanley bankers could have done differently. But since the emergence of the block trading probe by the Justice Department, the other major Wall Street targeted probe from the DOJ, it appears as if the Archegos team has told the Justice Department, or at least authorities, that they should review the transaction and see if Morgan Stanley bankers were indiscreet. There could be more innocent explanations. Futu could just have been caught up in the retail trading frenzy when an army of investors were targeting massively shorted stocks. But at the very least, for what we understand, is Bill Huang and Archegos want the Justice Department, want the other authorities who are looking into it to review the transaction and to make sure everything was on the up and up.
So there's a distinction between punting blame and actually casting liability. What is the potential liability for
There you go, look at that. Red is going to break, got 2 minutes, beautiful. Now you could be back in for the sell. So,
we also know that Morgan Stanley
get a sell away on here.
Institution that has come out and said that it is facing a
and nicely finished below.
It has even said that it faces potential
breakout line. RSI just gone 43, look.
Are proven to be right, where they will have to pay up on their end. There is no indication we have right now that the Justice Department is even taking the Archegos claim seriously enough to go knocking on Morgan Stanley's doors. But the numbers do paint quite a stark picture, and it proves another look at least.
2 minutes to go.
To dovetail this particular probe to a wider issue.
We'll see the RSI pop out of that zone. Sat on that support.
All of these individual types of services being probed by the banks themselves, trying to keep
not in a trade yet. Just wait and see. Got 1 minute to go.
So they can better deal with regulators in this kind of scenario. How connected is some of that?
There's no doubt we're living in the regime of the everything.
Yeah, it's just going to be a quick in and out. When it comes down to this level,
the
great.
SEC, there is a change in mindset, at least from the era of the Trump administration, and they're going hard after Wall Street on a number of fronts. Whether that's looking into every aspect of Archegos, the block trading probe, the WhatsApp probe, short selling, they are on it and they're all over it.
Sri, I'm in the triple leverage.
1 minute to go, 20 seconds.
Shares of Home Depot, I guess
And we
nobody
wait
cares.
for
If I
New York
own
Open.
1.735 million Walmart, and I
Back to grey, you see.
266,000 shares.
Break that trend line.
I do that.
You won't be able to do it
Wanting
discreetly, Tom, so better make sure you pick your bankers very carefully.
You know, this is critical, folks. I set you up for this. You know I did. You know going into your sell or buy of a block trade that it's going to be visible.
Well,
chatted upon.
You know that the bankers will have to canvass the market, and that's part of the challenge here. A lot of the professionals will tell you when bankers go about their task. Maybe there isn't any other way for them to do this. There are only so many restrictions they can place on people they're conversing with.
Exactly.
Ranging around a little bit.
May have a tough case to make against Morgan
Good
Stanley in
though.
the first place.
Thank you. Sri Natarajan there with the
30 seconds to
I'm
go.
sorry, Lisa. I think, and I think Arthur Levitt would be great on this as well. This is not about individual trades, Lisa, or even small.
Now you've got a blue zone as
trading accounts
instant.
that we mentioned earlier. When you've got 1.691 million and you want to unload 32,000 shares, in some ways, Lisa, it becomes public.
Well, and that's been, frankly, the big argument in bond trading for trying to keep it less transparent because people don't want to move the market ahead of different transactions. In stocks, the hope is
Hanging
for
around.
things to be liquid enough that
Again,
even
it's
a
in the
big
neutral
block trade
zone.
shouldn't move markets that much.
Nobody didn't take any trades. You've got to wait for that candle to finish. You wanted to finish below the trend line, and then we would have been in for a sell.
Kind of slowly move away or shift
Wait and
allocations,
now.
but not for selling yet. Even with
Sat.
all of the pessimism, what happens?
Candle.
How liquid is this market when
Well,
there is for selling, or if there is for selling, I should say?
Whether
We haven't
RSI's
heard about it. We
beat
got
back
inhibit
down
markets
again.
here. Brent crude, we can walk away from 114.
3 minutes till the 2 p.m. move. Is it going to be a 2
Lisa, I'm sorry,
p.m.
the bond
move?
market is not there, but it's migrating back to the higher yields of a number of days ago.
Retail sales confirmed a strong consumer, at least a less weak consumer than some people had expected. Well, I mean, honestly, I saw, for example, Renaissance macro research come out, Neil Dutta, actually showing that on a year-over-year basis, retail sales is up some 18%. So it actually is beating inflation. So basically, the health of the consumer gives
Nice
people
green
confidence
look,
that
nice green, but again, stochastic is still red.
Today, please stay with us on that. Christine Lagarde scheduled to speak, I believe, as well. Futures up 57, 1.4%. The VIX 26.73. A better market. Stay with us on Bloomberg Radio and Bloomberg Television.
In with you. You can zoom out and see, look, we're just sat on this support, still between the range really. Nothing really major has happened. We've got a couple of nice wins on the buy. Again, goes green, we could get in on the buy again in a minute. Waiting for confirmation. 1 minute left, let's pull back down again. See if stochastic goes green, points back. Like I say, the RSI's got to break that average line. It's at 59.7 right now. Going to break through it, or is it going to reverse back down again? Back.
Soaring energy prices and a short supply of key
20 seconds to the next candle.
fertilizers are
What do you have to do? Candle by candle. Totally fine doing it this way.
Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients
59 and gone green, but
really increases
trend line now forming on here, look.
the biodynamic profile of the soil.
trend line.
The recent price spike could mean more farmers.
Yeah, I'm not taking no trades. Look how close we are to it. So RSI is now peaking about 83 levels. So we're just going to hold here. I'm going to jump in the buy. Yeah, this is typical range you get before the market opens. 2 p.m. look. That was your kind of 2 p.m. move, but too close. Don't want to be in that. NAS are the same thing as a sell, support look and a push up, and again it's on a heavy resistance and a trend line, so there's nothing really doing on NAS at the moment. Expect for the open. And you just got to sit and wait on that. Just above RSI now, so all this is good. I mean, the stochastic's good, that's good, it's a bit high, but you know, on the trend line, so again you just want to wait.
I think that it's hard to put your head around
A pull back first before it goes for a sell, you know.
Are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Live from New York City this morning. Good morning, good morning. We have a little bit of a rally with equities up by 1.6%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open.
Using 15 minutes.
From New York City, we begin with the big issue, the strength of the U.S. consumer.
The consumer has really been the heart of this economy.
The consumer remains strong. Consumers are spending. We still have that $2.5 trillion of excess savings.
We're seeing credit card spending going up. We're seeing the loan pipeline at banks continue to do well.
I am concerned about how resilient they can be. There's the idea of looking at what the data is showing right now versus trying to think about the different range of outcomes.
Real income is down deep into negative territory.
Inflation is 8+%.
Wages are not rising as much as inflation.
Mortgage rates going up quite dramatically.
Energy prices rising, agricultural
Dip
prices
back down
rising.
again, you see, look, 59 coming back down under our average line. Wedged against here. We're not going to get a big move now until maybe this news event, 15, 10 minutes or so. If not, it's going to be the open. So
Is the US consumer
heavy resistance up here, remember,
through this year.
the open.
John, yes, indeed, this morning's retail sales number gives you a little bit of a snapshot of how resilient the consumers are. But again, I wouldn't read too much into it. It's not inflation adjusted. Let's keep that in our minds. And I think you know, the trickier numbers on the consumer side are in front of us rather than behind us.
Deepak, with that in mind, when you look at the earnings this morning from both Home Depot and Walmart, who do you think tells the story that you're looking to develop just a little
Looking
bit
at
further
nice,
from
but
the
everyone's
years
looking at
ahead?
buys.
I
But
look at the numbers from Walmart, and the CEO said the
Down
following:
again.
US inflation levels, particularly in food and fuel, created more pressure
Break.
on margin mix and operating costs than we expected.
here and above.
Is it a Walmart world for
Gotta
you,
wait
or
again.
a Home Depot world?
We've got the nice buys on this. We could have taken a buy again on this, but it was risky.
US consumers
Again,
comes in a variety of you know, different demographic
got like
groups
10
and
minutes
different
until the
spending
next news
patterns.
event.
But I think it's a good snapshot of where different companies are going to see and how they're going to navigate this
If this does anything.
consumption change. I do believe that there's going to be a shift that's going to be taking place in the upcoming months and quarters as we get closer to and get used to tighter monetary conditions, cost of capital going up. And let's be honest, you know, the disposable personal income numbers, which look quite healthy for now, once you start factoring in higher cost of gasoline, food, which might stay sticky for a longer period of time, you know, that disposable income might see a downtrend. And last but not the least, the Fed would really like to see some of the tightness in the labor markets to go away. So the idea would be to the wage inflation to slow down a bit, and I think that would have an impact on the overall spending pattern.
Smooth.
27 minutes out from the opening bow. Futures are positive by 1.5% on the S&P, on the Nasdaq
Anything
by
now
1.9.
and
The retail sales data
get the next.
pretty good. Taking a look, here's Mike McKee. Morning, Mike.
Good morning, John. Yeah, pretty good. Perhaps a little bit better than expected, even though some of the categories didn't come in as high as economists had thought. But retail sales up 1.4% in March, up 0.9%. It's the control group we watch, and it's up 1% during the month, which is just barely changed from 1.1% in March. So Americans are still spending some money, and you can see there gas stations were a real surprise, down 2.7% after rising 9.6%. But look at department stores, up 1.1% after a flat reading in March. The weird thing is people thought that we'd be spending so much more on gas, we wouldn't be able to spend on other things. Motor vehicles making a big turnaround there as well, and that added a lot to these nominal numbers. The big question is, will gasoline prices and food prices crater spending going forward? We've seen some major changes in both of those over the past year, where we're up like in the 30%, 37, 32% for gasoline. Food prices up 10% over the year, and that is making a big difference in terms of how much you've got left over to spend. But so far, people seem able to spend. Question John asked me earlier today was, what does this mean for the Fed? You don't have to ask me. We can ask the Fed. There's 6 of them speaking today. Jim Bullard, the first out of the gate this morning, saying he thought that personal spending would
Finland, that he wasn't here, he'd be a nice buy, but at the moment he'd
have strong labor markets,
banging his
give people additional wages.
weight.
The man of the hour,
The heavy
man
resistance.
of the day is going to be Jay Powell, speaking a little bit later at a Wall Street Journal conference, and Wall Street will be paying a lot of attention to him as well as everyone else. On
Mike,
the open
what's
market
left to say? What is left to say?
Scalp
given
that
everything
buy,
we've
but
already
again,
done?
just not risking.
Probably nothing. If
Made
you're
today
trading
already.
today
Just
based
take
on
the better
retail sales
moves.
figures,
Or the risk.
maybe you want confirmation
So
that
I'll
you
give this
read it right.
back.
But at this point, we know the Fed's going to go 50 in June, 50 in July. So the economic data are either going to need to surprise a lot, or we're going to have to wait until the July data start to come in before we see a change in Fed policy.
Mike McKee, looking forward to the Fed speak a little bit later. Some people are, at least. Mike, thank you. Tom Kennedy at JP Morgan joins us now. Tom, great to have you with us on the program. I want to get your response to the data we had about 35 minutes ago, and we'll work our way through it from there.
Yeah, good morning, John. The data is, I think, what Deepak said. This is something we can't latch on to in aggregate right now. It is a strong consumer. We already knew that. Tons of revisions in this data, and that post-COVID experience of data revisions just continues, which makes it challenging to read it in the moment. Circling back to what Michael said, which is waiting, and what Deepak said, which is financial conditions have tightened. This has been the most historic tightening in financial conditions we've seen, absent a recession, going back 30 years. And it's just going to take time to see it filter through. I think this is the question the Fed, John, is going to be asking themselves. Have conditions tightened enough to slow growth and inflation? We're already seeing growth and inflation numbers for 2023 from Wall Street start to come down. And in June, we should see the same from the Fed.
And Tom, the starting point for a lot of people is how resilient is the US consumer, how strong are household balance sheets, and with that in mind, how high do rates need to go to curtail demand? How do you work your way through that 3-step process?
Yeah, the biggest debate on Wall Street is how high do rates need to go to slow growth and inflation. First of all, John, the resiliency of the consumer is not necessarily the most important question in there. It's what is the behavioral response to average Americans when financial conditions tighten? Academically speaking, in the bond market,
Red now on the stochastic, you see.
cash rates would be above
I coming back and
2.75%
going to get a
for the next
rejection on
decade.
trend line.
John, my son is 6 years old. He'll be driving in 10 years. I'm not that confident cash rates will be that high. And to bring it back to home, we're already feeling the consequences of a very
5 minutes to go. Countdown.
30-year
Industrial
mortgages,
production.
5.5 is the most rapid rise in that rate, and relative to existing mortgages today is consistent with a disincentivized to prepay, a disincentivized to move. The most cyclically sensitive sector of America should start to slow meaningfully in the coming 3 to 6 months.
And Tom, given the price of the story, you sound like a man that's becoming a little bit more constructive on risk assets. Is that a fair characterization of your current viewpoint on things?
This tightening in conditions, John, was necessary for a soft landing. So the soft landing possibility is still our base case. And really, we're questioning more about have conditions tightened too much here. I know the going narrative is that there's no way the Fed is behind the curve, but there's a meaningful tightening in conditions so far. For me, it starts to lead to investors should be adding core, boring, liquid fixed income to their portfolio. They're underweight, and if we get a soft landing, yields should come down. And in the unfortunate event we get a recession, those yields should come down a lot.
Deepak, Tom Kennedy thinks bonds are back. Just pure, boring treasury bonds. Do you agree?
Mostly, for sure, they are better buy today than they have ever been in the last few years. Listen, we are coming from an era of financial repression. You're buying
1 minute to go on this candle.
Price with low interest rates.
Is the RSI average line going to be a support level, buy, or is it big back?
So those losses
Red on the stochastic, again, with a range as you see, zoom out, see that anyway. Top of a heap there.
Looks quite interesting. The municipal bond market for us, for our private clients, look quite appealing, especially if you look at the high state, tax bracket. And I think
nice if we can get a retest of the zone here and a break below, but matter really, or a break above, then we can scalp to our breakout line this and then wait again. See what this does. Countdown now, a couple of minutes to go. Industrial production month on month for April, year on year. So one of the Fed is speaking as well.
So I think the gut reaction is to find comfort in some, plain vanilla bond portfolios. My take would be to still be a little bit more conducive to risky assets. That's, long duration asset plays given on the equity side. So, when we look at our asset allocation, I think we are a little bit more biased towards equity markets.
Deepak, biased towards
NAS is on
equity markets,
a nice run up. There we go. We could have got in on a NAS. Might have got on that.
So the first thing is
all to get in now. Buy, look. Let's stick a red. So again, no, frustrating, but you've got to just see what it is and not jump in. And you could have scalped that little move there, but again, you just want to wait now for break a trend line.
Having a post-COVID business plan.
Much chance of it back down, so it's going up. So just sit and wait.
The bigger the company was, it gives people
back on this news.
Sort of a comfort that big is better. And I think you should start leveraging a little bit towards the other side of the markets, whereby a bit more cyclicals. So here, energy, industrials, materials would come into play. Long duration, real assets, so infrastructure might make sense for certain investors. REITs have tended to do better. So those kind of the investments would do well. If you really have a base case as a recession, then defensive should start making their way into the portfolio. Here, healthcare would be right at the top, along with some consumer staples names. So I think you need to measure what you're currently invested in. Try to see if some of those names still give you that comfort. Most likely not if if you've been sticking with them for quite some time, and start gravitating towards some of the names that can either potentially hedge you against a rising inflation and elevated inflation level, or protect you if there was a downward recession, which again is not our
watch the countdown
either. Deepak mentioned the 6 weeks of losses we've had in the equity
market. Like I say, not going to any result. We'll just wait and see if that moves anything.
Last week we snapped that streak. Yields headed lower. We kissed 320 2 Mondays ago on a 10-year. Right now on a 10-year, 296, up about 7 basis points. Tom Kennedy, that negative correlation that we seem to have re-established with the equity bond story, do you think that sticks, and why?
No, I don't think it does, John. What's the prerequisite to make? Really, you're describing the environment where the 60-40 just simply doesn't work. Both legs of it are hurting you. If you look back over the last 15 years, there have been other instances in
20 seconds.
This happens. It is in big monetary policy inflection points, namely 2013. This one feels especially painful because it's happened so quickly. But it circles back to that original question. When are rates high enough that the Fed has the optionality and the balance?
10 seconds. Right, let's see what this does, if anything. Last one was disappointing.
Should work. The scenario, John, where that's wrong is that the growth and inflation numbers for next year just don't come down, and the average American is not as interest rate sensitive as we like. It's a possibility, but I think that's, of the scenarios we're talking to here, it's the lowest scenario relative to just an outright recession or a soft landing.
Thomas Kennedy, Deepak Puri sticking with us. Yields are higher through the curve.
Than expected. 0.1 from 0.5
basis points on a 10-year to 295.
on the month-on-month.
That is the price action in the bond market. Let's get you some moves about 15, 17 minutes away from the opening bell. Here's Abby.
John, let's start out with a tale of two stories in retail. Of course, I'm talking about Walmart and Home Depot. Walmart is falling sharply lower. In fact, heading to its
Year
worst
on
day
year.
since March of 2020, rising costs taking a toll. They missed earnings estimates for their fiscal first quarter by 12%, despite a sales beat. They've also cut the profit forecast as a result. The inflationary pressures really coming in on need to have food and fuel. For the nice-to-have home improvement retail sector, however, Home Depot, they beat earnings by 10%, sales by 5.6%.
I pushed up and
Boosted
broke.
the full-year forecast. So even despite rising mortgages, it seems folks are
Open.
out there buying items to
Sat on our trend line now, so that's pretty good.
that they can get at Home Depot. As for Citigroup, up 4.9%. Berkshire Hathaway has revealed a 2.9% stake, really bought at a discount, the stock near an 18-month low. And then as for the engine behind the
Year on year 6.4 it's saying.
Big tech, Apple up 1.8%.
Really
Even
good.
with yields higher, it seems as though the sentiment is improved, maybe having something to
Will
do with
that
positive Asian
impact
sentiment. And of course,
30
Europe is
a
higher
little
too, John.
Abby, thank you. Coming up on the program, why for many, cash is king.
I do believe stagflation, unfortunately, is the baseline. We're going to see notably lower growth, and we're going to see frustratingly high
He has
inflation.
dipped already on that
Coming
news.
up, the Bank of America Fund Manager Survey. That's next.
As well, look. News. Expected. And took a little bit of time.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible
Red.
to
Sorry,
the
here we go.
software that is reading it, because that
See.
software or robot is going to decide whether or not a human ever gets
On the
it right.
reverse, obviously, as you can see, the news was better than expected. That.
might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral
News until
mobility. So we have
housing
there and
on.
really, we're going
Focus on the open in 10 minutes.
electrify everything. And what does that mean?
So we're going to see a push down to our support level.
Today, Bloomberg is live from the Greater Boston Chamber of Commerce annual meeting, exploring the challenges and opportunities in New England. Among our guests,
Size back with 53 into the neutral zones to down. See.
special coverage live from Boston begins today at 2 p.m. Bloomberg.
1 minute 18 seconds. 1 minute to go on this candle.
I do believe stagflation, unfortunately, is the baseline. We're going to see notably lower growth, and we're going to see frustratingly high inflation for this year and into next year. Whether we get something worse depends on the soft landing debate for the Fed. I do think that the left tail of recession is something that we must keep an eye on.
Investors piling into cash amid mounting stagflation.
40 seconds to go on this candle.
Bank of America's latest fund manager survey, writing the following. Bottom line, extremely bearish May survey, but missing full capitulation. This is the piece that investors need to look for, apparently. We're
20 seconds.
still and not cut.
Red.
Michael Harnett and the team
Red on the screen.
to an imminent bear rally, but ultimate lows haven't been reached. Katie Lyons has more. Hey, Kaylee.
Hey, John, that doesn't sound absolutely fabulous. Yes, no capitulation yet, but still an extremely bearish survey, evidenced by the fact, as you alluded to, investors are flocking to cash in a way we haven't seen in more than 2 decades. Cash piles, according to this May survey, at the highest level since 9/11, and growth optimism is at a record low. Stagflation fears at the highest since 2008. That really is your reason why. A lot of that stemming from what investors see as the biggest tail risk out there, and that is hawkish central banks, followed shortly thereafter by a global recession, with which both now top concerns over inflation and the war in Ukraine, which have come down a bit. Systemic credit events also coming in down at number 5. And as for what all of that means for allocation, as I said, cash the highest in September of 2001, positioning overall the most defensive since 2020, including the biggest equity underweight since that year, and the largest underweighting of technology in particular since 2006. As for where investors are long, healthcare, staples, and commodities, and long commodities actually tops the list of most crowded trades. Then short treasuries. You also have long tech, long Bitcoin, long ESG in there. And again, coming back to that cash issue, John, long cash coming in at number 7.
Some of these numbers just remarkable. Katie, thank you. I know you and I both read this thing when it comes out every single month. It came out earlier this morning. I'll go through those lines again that Katie
Trades in there.
Since 9/11. Growth optimism at a record low. The biggest equity underweight since...
Got 7 minutes to go till the open, so good luck everybody. Again, the housing market pushed it down a little bit. Sorry, the industrial production pushed it down a little bit better than expected, but not really a major move yet. See if it's going to hit this support level.
Yeah, this is interesting, but I'm not too surprised. You know, when you look at least from my experience, right now,
It might bend it down a little bit. We'll see.
You know, they don't know what to make
Creeping
of all
back.
these idiosyncratic risks originating from outside of the U.S., where you don't really have much control over. Even the Fed has said that they don't really have much control over those items. So I think rather than the survey gives you a good soft insight, but the actions are a little bit more that wait and watch scenario, and that's really, at least on the risky side, that I continue to see. Not surprising, people are taking refuge in cash. Cash tends to become a way more important of an asset class.
Down on that support zone, look, no.
The compulsion or the appeal in any other particular part of the market. Having said that, I think on a tactical basis it might make sense, but on a strategic long-term basis, obviously it's not really where you want to be, given where the inflation numbers are and the fact that you're going to be losing your purchasing power. So overall, there are other things investors
6 minutes to go.
should do to protect themselves. I think to get go, you got to have some time in the markets, but you.
So we're going to get a break of our baseline down.
Some changes within the
Sat
within the sectors
trend line.
that you want to stay invested in, but don't really shun
Then again,
investing and equity
30
markets in particular.
in.
We've talked about this. You guys have been talking about it all morning. You know, when you have drawdowns in the fixed income markets, very difficult to get back to make unrealized losses become realized gains. But on the equity market side, that can happen. And normally, the best days tends to happen right along the worst days. I'm not a big bull. I'm not slamming on the desk and saying it's a great bull market.
Yeah.
But on the other hand, I would say that I think the peak pessimism in almost everything is right here, right now. And going forward, you should start seeing some green shoots developing in a whole host of areas.
It's on final word. Can you call it peak pessimism when 2s, 10s are still at 30 basis points?
You know, John, I never try to call the peak on that.
Go on, Tom.
I just want to layer on to what Deepak's saying there. Cash levels on our platform as well, John, near historic highs. This is in times of uncertainty where people are seeking refuge, and when the 60-40 is not working, that certainly makes logical sense. What's different from the Bank of America survey relative to our platform is this is not the most underweight equities we've seen our clients. So trying to find some insurance benefits of core bonds is where we're focusing to try to add some clarity and some portfolio insulation in a time of high uncertainty.
Deepak, I've got 30 seconds. I know you want it. You can have it.
Yes, so one thing I'm really following, you look at the 10-year inflation expectation. They've gone down from 3% to 2.7% today. We might be at the end of this inflation peak, and I'm talking longer term inflation expectations. And I think that is telling the markets, at least to myself, that whatever the Fed is doing, it is starting to work. So I would just tell the investors to hang in there and start looking for some good news in the months and quarters to come.
Deepak Puri, you'll be back before then. Thank you for being with us today. Tom Kennedy, to you as well. Your opening bell is 7 minutes away. This is Bloomberg.
Get ready, team. Get ready. One load up. See what we get. Bit rangy at the moment. See if we get a strong move. Minutes to go. So everything's still fairly bullish in Europe. Again, still before flat. It can go either way.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft.
2 minutes to go, 3 minutes to go. Last candle, 249. So this is the final candle. Let's see what we get. Yeah, we'll just zoom in a little bit. Right on a trend line. So yeah, can go either way on this. We'll go with the flow. RSI dips down, we'll get the sell in. If it points up, breaks that, we'll go for buys.
It is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Equity markets are higher. Here are your morning calls. Your first one, Piper Sandler upgrading AMD.
1 minute 40 to go, 1 minute 30.
Catalysts as the chip makers' core businesses continue running smoothly. Bernstein downgrading Molson Coors. The market perform, seeing little remaining upside with Europe's recovery now largely priced in. And finally, Wedbush reiterating its bullish stance and $1,400 price target on Tesla. This as Elon Musk injects even more uncertainty into his complicated Twitter takeover. Up next, Wedbush's Dan Ives, just around the corner.
Good luck, everybody. Ooh, go. Seconds to go. All right. Wait, it's like bouncing. Way to pounce for a move is what I like to see. Kind of move. I like it being in a range, you know what I mean? It's a coiled spring. We have 30 seconds to go. RSI still around in the neutral zone, 56, 57. Looking like it could be a bar. I mean, yeah. Then dip down. We just don't know about. We're still not yet. 7 seconds, 6, 5, 4. Good luck, everybody.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved
Brilliant.
in space exploration.
2 cheeky buys. Oh, we got $100. There you go. 2 trades there, $100. We've got 44, 32. 25 seconds.
If we want to have a successful human missions to Mars, we are going to have to learn to live and work off.
Beautiful. Look at that. Nice. I can wait and see if we get a pull back. Well, it was an easy one, guys. Easy one. RSI is spiked up, as you can see. Look. Plastic went green. Beautiful. Now see if we get a dip back, a dip down. Yes, we've got a nice sell. Jumped in there. Beautiful, beautiful.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side.
Get on that sell. What did it get?
Was spot on in a way.
38.10. So another nice sell there. $50.
What quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web. This is Bloomberg.
And down. Come on.
24 seconds away from the opening bow this morning. Good morning to you. Your equity market pushing higher.
Damn, beautiful.
S&P by 1.6%, on the Nasdaq 100 by about 2 percentage points, on a Russell by 1.85. A nice lift and a ton of earnings we can talk about in just
Yes, brilliant. Ooh, more wins. Oh, amazing. We've got 60, 12, 4, a loss of 8. We've got 38. We've got another $200 there on that drop. Perfect, guys. This is what it's all about. There we go.
The market changes, I imagine the views might change too. Euro dollar positive, 1 full percentage point, 105.34.
What a move. That's what you want to wait for. There was that quick buy, and then we had the drop down. Look at that.
A lot of people, of course, on the other side of the trade as well. Crude, 114.42, after having a little look at 115 earlier today. We're positive.
Perfect. I told you it was going to be a reversal, and there it was. RSI spiked up green. Not a problem taking that. We got out at the points of interest. Now it's dipped back down. Now we're going to get some more sells. Let's have a look. Go, go, go. See if it's going to wick down.
The biggest winners on the day, biggest point boost for the indexes. Apple up 2.1%.
Let's have a look. Yeah, if it's going to pull down.
But it does seem to be a sentiment shift, even with yields higher. That's especially true for NVIDIA. Now, NVIDIA on Friday up 9.5%. Yesterday it fell. Now the chip maker is back up 4.9%. So some folks want back in on these big tech plays, these high beta names. That's true too for Tesla, up 3.5%. But of course, as you know, Wedbush and Dan Ives reiterating their bullish stance as odds increase that Elon Musk's takeover of Twitter won't happen. Speaking of Twitter, now down an 8th day in a row, down 1.3%, down more than 25% over those 8 days, well below where the stock was when Elon Musk initially.
We got another 2 sells there. We got another $100 as well. Brilliant. 2 more sells.
Investors seem to be betting that's going to be a tough thing to prove.
37 on the stock. Avi, thank you. 37 against the peak price of 54.
Awesome moves.
20. The spread is getting wider and not tighter. We'll talk about.
And we just got 2 more, I think. Oh, look, yes. And we got another 44 and 32. Another 100. That's it. I'm done. That is it. I'm done.
China in particular, I think nobody has any doubts about that.
And 2 more.
We try to stay away from short-termism and focus on.
Love it. There you go. We're right on the support lines. That's why I'm out. I mean, you can't get better than that. This is true scalping. This is how you do it. We've got red on the RSI. We've got red on stochastic. We took the buy on the initial open, which was fine. We grabbed some pips and buy on the sell. And now we're against our zone. So now you don't do anything. If you've missed it, you've missed it. You just wait now for price to break the breakout zone. This is a well-respected zone and a blue zone. It's going to come down lower. Wait. But that is NY Open done in 5 minutes, guys. 5 minutes. And we did 1, 2, 3, 8, 9, 10, 11 trades. 11 trades and 1 loss. And the loss was £8, which is about $12. Let's post those results. This is the kind of thing you can do. Like I say, maybe my results aren't typical, but this is what can be attained. You learn the art of true scalping using systems.
Because they may have little choice, right? We're at a point where industrial output and consumer spending in this country, because of the zero COVID policy, are at really, really low levels, basically the worst since the pandemic began. Now, where do we go from here? Potentially some upside. Things in Shanghai are improving, but you look on the Bloomberg terminal and the reporting overnight about other Chinese...
Go, so you've got 2 minutes left. Wait for this candle to finish. Then, again, for more sales. RSI is now steaming into that 25 zone, which is what we want. Wait, because it could sit up on here.
Ed, we can touch on that another day. Ed, we'll talk about Twitter later this morning as well. I'm looking
Great. So we're 15% up for the day, so we're more than done. Another great day, and we're done with like half an hour's worth of trading on maybe an hour between the Euro and London, and we've just traded 5 minutes of the New York, and that is it. We don't need to do any more. To be honest with you, we've got the news coming up in 23 minutes. Housing news. But yeah, we've smashed it today. It's really good. It's best part of 30 trades done. It's taken just got the 1 red, 1 loss out of 30 odd trades, so well happy with that.
Here in the US, the latest 13F filing showing hedge funds ditching big tech and piling into energy. Has more. Morning, Shonali.
Good morning, John. It's not just technology that's being sold by the biggest hedge funds and other institutional investors. You're also seeing a slight sell-off in consumer discretionary and communications sectors as well. But when you look at the data here, there's a big dispersion between what the hedge funds are buying and what everybody else is buying. Of course, the hedge funds were already so overweight in technology. They are buying energy, though, now in bigger form than the average investor. Let's take a look at what's the most sold stocks, because interestingly, you see it show up in Berkshire Hathaway. Some of the most sold stocks include Bank of America, Vale, Occidental, Citigroup, and of course Twitter. I know everybody is talking about as well. Activision Blizzard, HP, and Meta. But if you look at Berkshire Hathaway, they're doing some of the opposite. They're buying Citigroup, which, as we know, is much cheaper than a bank like Bank of America and Wells Fargo. They've bought Occidental, and so you're seeing some contrarian bets being taken even among some of the biggest investors. I also want to take a look at what the Tiger Cubs are doing, because we know some of the most famous Tiger Cubs have lost a lot.
We've got to do sometimes is wait for the big move. If you don't want to trade the initial open like I do and get a micro scalp, then just wait for the big move. It will come. It could have been a buy to here, but it was, in the end, it was the sell, which, if you look at the overall market structure, is what you would probably edge on. Had a nice bull run, a drop, a retest, and then a drop. So kind of an M pattern. So you just zoom out, you can see that ideally as a TA, as a scalper, you want that to be a sell. But you've got the fundamentals kind of messing it up a little bit. That's why we had to wait. That was a nice move, and this is still, those who want to continue trading, this is still process. Look what happened, you see, this is what I mean. You've got to wait for it to break a key level. Don't just jump in, because RSI has come up. The stochastic is pretty low, but don't worry about that too much. It's more the RSI. If the RSI hits 25, right, red zone, break here, then you're in for a sell. Quick sell. Don't hold, you're in and out. Get into that oversold territory. But you want to wait for this candle to finish. 2.5 minutes. Look, it's sat that zone. Watch the RSI.
Plus again, that outlook boost that you mentioned. For Walmart, though, of course, it was an outlook cut, and really the reason why the company has a cost problem, John. That is why the stock is down about 8.5%. They're dealing with higher costs when it comes to the supply chain and its labor force. Plus, as you alluded to,
what happened to NAS?
High inflation in food.
Oh, beautiful. Look at that. That was the industrial news, basically. Spike there. It was the open.
other areas, and that's bad news for Walmart because a lot of the higher
And NAS literally spiked both ways. It was in on the buy here. You could have got some, and again, I would have gone probably for the buy because we were green RSI, we were green stochastic on the end of that candle. Look, I'd have gone for the buy, which if you held the buy, you'd have had 10 pips at points, maybe more, swing on the drawdown, but as did really well. Now it's just resting our breakout zone. Wait for that break. Safe side, missed it, you've missed it, you go again on the next move. Always more moves. Thing, you should not get FOMO on our system and on 3-minute time frame, because say you're handling 30-40 possibilities a day just on one thing. It nags you as 30 whatever. You miss the move, don't jump in, don't go, oh sod it, I'm in anyway, you know, never do that. Just take your finger away from the button.
And give us very clear guidance that the next couple, meaning 2 meetings, are probably going to be 50 basis points. And you know, that kind of stability is exactly what the market needed. I think even later today when we hear from Chair Powell, I think we're going to hear along the same lines that, you know, they're not going to allow the Fed pricing to get too aggressive.
Nice.
As long as we're pricing for a
By getting to that 75, USD is the opposite way, look, down.
I think that's fine. You know, anyone that's in the camp that we're going to go to a 4% Fed funds, just
10 seconds left.
Inflation back to 2%. I just don't see how that's going to happen, given how much of the inflation is supply related.
So, Gagi, what do you think happens here? Just in terms of the market call, you think yields have peaked in the Treasury market? You think we've bottomed in the equity market? What are you looking for?
Yay, and we just jumped in there on that red, and we've got £28, which is about $40 there. That's how quick you've got to be. I just saw it go bright red, jump in and out, it went green, and took off it.
So think 10 years and higher. I think we'll still move somewhat higher. I think, you know, we saw about a 320 or so earlier this year. I think we can get there or a little.
Yeah, and that's all you got to do.
As well. So no, yields haven't peaked in the
Blue zones there, look, as support. Broke the zone, but you've got the blue zone again, so don't hold. You know it's risk. If the blue zones come up, they're respected historical support and resistance. As soon as you see the blue zone and you're in profit, take it, get out, and wait. Wait for the zone to either disappear, wait for price, break it. Go again. See, you're getting to the oversold zone, so that's telling you, yes, I'll nip in. I'll just do what I did. I was in there for like 5 to 10 seconds maybe, and got there quick. $40 or whatever, you know, that's what it's all about. Didn't have to take that trade, but it's just to show you, trying to give you examples of multiple entry points you can get. I was watching that, saw it flip bright red, saw that candle just finish below the breakout zone, was in and out, and now it's reversed back up a little bit, which you expect.
In the beginning of 2021, and that continues. So people really flocking to sort of the 0 to 5 year part of the inflation curve, and that's something that we have been talking about and we've been seeing inflows as well. You know, the reporter that was on right before me was talking about the 13F, obviously, and the movement away from technology. And when we look at the sector flows in ETFs, obviously there's been an outflow away from technology, and there's been
15 minutes to this last news event, and then that's it for today. Most people have been done by now. Thing. Pick the zone that's good for you, trade it, scalp it, and then get out. It leads at the open. Nicely. Nice full signal, and again just wait until the next candle to finish and jump in. If it breaks above here, you're in. Finished a breakout zone, as long as it stays above there. Got 27 seconds to go. And US Tech now.
You know, if the signs of capitulation would be if we really saw broad-based outflows from the equity markets and moving into cash or moving into long-end duration, sort of just leaving the market because they're really scared about the investment horizon for the next couple of months. And we're not really seeing that yet. I mean, if we just look at the data today, The consumer is still in a very strong footing. Obviously, the retail sales number shows that. Then we have the IP number again. No fears here of a recession, yes. So that capitulation flows away from equities altogether. We haven't seen that.
That's going to pull back, look, you see.
Reflecting a little bit of defensiveness, which I think makes a little bit of sense. If you are indeed worried about some sort of global growth slowdown, I think gravitating towards the more defensive part
Back into our breakout zone.
Towards minimum volatility and towards perhaps the front end of higher quality credit and higher quality treasuries makes some sense.
Gargi, thank you. As always, Gargi Chowdhury there of BlackRock. Your equity market positive 1.4% on the S&P, on the Nasdaq by 2.4.
Dip looks.
Points, about 13 minutes into the session.
You saw it flash, but it just was against the blue zone. Again, that's what you don't take that.
For Twitter.
I think Twitter is currently the best, or looked at another way, the least bad public square. In order to be better at that, it needs to really get rid of the bots and the scams and spammers.
And he keeps building on that line. More next with Dan Ives of Wedbush.
It's sat below the line now, you see. That's why it's a dangerous trade. You've got to wait.
Access the financial world on
Left.
demand.
The next candle is your crucial one.
Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets.
30 seconds.
Visit Bloomberg.com webinars.
Indecision, you see, look, right down between buyers and sellers, and the neutrals. Dashboard.
En nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar.
Beautiful drop. Look at that drop. Ooh, that's what I mean. You see danger when you hit these breakout zones. You tell people the red, dotted green, very, very, very powerful. Rejection. That sent it skywards. Didn't trade any of that. This is always really volatile. It could pull back, it could drop down even further. Who knows? You know, trapped in that zone. Look. This 30 is also on the support. We're in green, look on the stochastic, on the RSI, and see if this is back up. You'll wait, like I say, we've just got this last bit of news to see. A minute's time. But really, we've got red on the RSI, red on the stochastic. If it breaks here, this could be more sells. Sell off.
I think Twitter is currently the best, or looked at another way, the least bad public square. In order to be better at that, it needs to really get rid of the bots and the scams and spammers.
That was a week ago.
RSI 32, big push down that.
Twitter had this to say this morning. Twitter
There's way too much resistance at the breakout, 3 blue zones. Here look, tested, here look, you can just see
San Francisco is
Oracle.
back for more. The latest from Elon Musk on Twitter overnight.
Yeah, the latest from Elon Musk is simply that the deal will not proceed for $44 billion until he gets further evidence that satisfies him that Twitter's claim that less than 5% of users on the platform are bots is proven. He wants more data, essentially, and he was speaking Monday at this conference in Miami where he said in his estimation around 20% of accounts were fake or bots, and it could even be as high as 90%. He then followed up with the tweet that you see on your screen. And what
Good
he's
lad.
referring to in the second part of that tweet, Twitter's CEO publicly refused to show proof of the less than 5% figure, is a very long Twitter thread that Parag Agrawal posted explaining the science behind, the methodology behind how they calculate it, how it's a mix of public and private data. But the most revealing part was that a week ago, according to Twitter's CEO, Parag Agrawal, he'd met with Elon Musk to go through all of this. If you come into my Bloomberg terminal, the upshot of all of this is that the market increasingly
There you go.
doubts
The reversal
whether
off.
this deal will happen.
Dangerous
Right,
and
that's
as
the spread between the $54
we've got that sale jumped in quick, but now we're back in. So yeah, again, it's all messy, big zones of support and resistance, trend lines, everything. So leave that alone for now until you get a big move.
Says this circus now takes another turn as Musk appears to be walking from his deal or driving a much lower price on the spam fiasco. For Twitter, the street will now assign a high probability a deal does not happen. Dan Ives joined us right now. Dan, you and the team over at Wedbush say 60% chance that Musk walks away from Twitter. Why isn't it higher than that?
I mean, it could be higher. I mean, it could be as high as 70, 75%. I think what Ed's talking about, if a deal does get done, it's significantly lower than the 54.20. I mean, 54.20 at this point, it's out the window. There's a better chance for me playing for the Celtics in the playoffs and that deal happen at that price. Now it just comes down to, can they renegotiate on the bot issue, or does he walk? And
Brilliant. Just got a nice cheeky sell on that
it's not as simple as just a $1 billion breakup fee. I think
US 30. There you go. Look, broke below. RSI just dipped down. It's jumped in there for 34. 50, so that will do, mate. That's pretty good. That's pretty good.
Some of the actual due diligence, I think there's questions about if he could actually walk on this specific issue. And that's why right now, I mean, Twitter board, they're between
5-6 minutes to go, so we're focusing on US 30. See, it's got a nice zone now. Well, that's stochastic to dip back red again, ideally. You know the bears have taken control of this move and to that next area because there's 300 points up for grabs on this.
I mean, the New York City cab driver knew that Twitter had a bot issue.
Dan,
and I think that's the
Blue zone,
help me understand this a little bit
go,
more.
disappearing, so just keep watching, you know. Wait, if that sticks, end your sell.
Well, I mean, I think there's some specific due diligence that he ultimately would need to prove, right? That about the 5% being inaccurate versus what he's talking about. And that specific issue needs to play out right now behind closed doors in terms of them either renegotiating, coming to a number, coming to what ultimately would be a lower deal price. And that's why the street right now is assigning Musk. He's getting cold feet looking this is a scapegoat to try to get out of the deal. If he does do a deal, it's obviously at a much lower price. And that's why right now that street is basically waiting to see how the negotiations go behind the scenes.
Well, no one is seeing this play out.
Beautiful down look now.
Play out in public, one. And two, if a higher price is on the table, Twitter's in play, Dan, for more than just Elon Musk. Who else is lining up, circling around this name?
I think that's the fundamental problem because they'll be at the altar with no one there. Because
Brilliant.
At these prices, I don't think
Another 2 sells there.
That's interested. I think you start to get to lower prices, then you could
30 and 18.6.
Some bidders come up, but that's why right now, you know, Musk. I still believe there is some chance he wants to get the deal done at a lower price. But the problem is that I just don't see any other strategic or financial bidders out there, which is why Twitter's back's against the wall in terms of how they handle this, what I'll call Alfred Hitchcock-like.
Here's a saw the stochastic go red. I was in.
Yeah, I mean, this has been over $100 per
And
share overhang on
RSI.
Tesla stock. Big part of it is that leverage. You know, that 300 billions come off of Tesla in terms of Musk's golden child. And I think ultimately that was really
Price action was perfect.
I think that's what
Waited for that stochastic to give me the signal. That was it. Took it in. Easy.
This would be a bit of a relief. But let's just be clear. The way Musk has handled this is a disaster. It's a black eye for Musk. And I think in the eyes of the street, I think there's actually net negative impact, you know, even in terms of for Tesla stock, just the way Musk has handled this.
Dan, I've got 20 seconds.
Right, red is going to push down more. Look.
On Tesla, when we're at 750 right now.
I mean, look, for us, it's all basically about what units look like.
So close to that
over the next month or two.
line now.
How bad that China number is going to be. And then ultimately, if we feel like there's a change in the fundamental thesis, we would change our numbers and price our accordingly.
4 minutes, so still 4 minutes to go.
We have not done that in terms of what I continue to view as just a massive risk off across the board. As me and you've talked about, I do believe it's an overcorrection across disruptive tech.
Brilliant. Yay, 2 more cells. 2 more cells. We've got 32 and 32, so we've got £64. That's about $85. 2 more live scalps there. Posting those into the group. My result go into there. Yeah, that's how you do it. As soon as it went bright red, bang, I was in. It pushes up now. If it goes bright red again, you can go in again. Like I say, we're waiting. We've got a couple of minutes now to the countdown of the next news. With all these in and out, like I say, I preset my profit for 50 to 100 pips out. So I know the software is quicker than my fingers at getting me out of a trade. It was the win there, now it's gone green, so now you just want to wait.
I'm David Weston. We've got the information.
Wait for the news now.
You just hit the nail right on the head.
From business's most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We get expected to be lower, 75 on the index and 1.9 inventory. Also higher. It could be a mixed result. The NAHB is the one I usually go with. Let's see.
.26 minutes in, holding on to the gains. Equities up on the S&P, on the Nasdaq too. Let's get to your trading diary. President Biden, 1 p.m. Eastern time. Fed speak.
Let's get ready. We're on US 30. We're open at the moment, and we're just waiting.
Housing starts and another round of jobless claims coming up on Thursday morning. That's the week ahead from New York. Thank you for choosing Bloomberg. This was the countdown to the open. This is Bloomberg TV.
40 seconds, team. See what we can get. Seconds. Good luck, everybody. Let's see if we can get a final trade of the session. Yeah, sell is worse than expected. And the result is worse than expected. So there you go. It's pushing up, reversing against it. So let's see. Wait and see. Here's that result. What's the business inventories?
His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam
RSI's
Adani,
up.
has $20 billion of investment.
Going green. Look. Again, sometimes what happens, you get that reversal going against the news.
The realism and sincerity of those green ambitions and those of its two biggest billionaires.
Brilliant. Got $35.99. We've got $50 on that. There you go. Cheeky little buy. So that's why you take the result and you go what the RSI
is a terrible thing. Inflation Tesla will be in the pole position to
win on the buy.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg television.
There it is. Look, there's the result. Result
Seats in the house for business's greatest minds.
was worse than expected for both. Nice. Up, and we'll get a sell. Obviously, going in the way of the news. Manipulation. Buy. Perfect. Push up. Stochastics shooting up. RSI shooting up. The direction is as important as the colour. Remember that. And that was a quick 100 points there. A quick 10 pips. Finish the stream.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history. Mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines.
Perfect. Well, thank you everybody as always for joining me. We've had a successful trade of the retail sales, which was a bit slow, and in the end we got the buys. Then we got the sells on the NY Open, and then we got the buys on the housing news as well. So all in all, a good session. We've done about 40 trades. We've got a couple of losses, and that's it. So we're well up for the day. Like I say, we're that 16% on the 6,000 account I started with, so that's more than enough. And the whole point is you don't have to continue trading all day. This is what's all about. This is what true scalping is about. You don't have to wait. You don't have to hang around. You haven't got to set crazy stop losses. It's in, out, take the green. So, like I say, if anybody wants to learn how to do all this, then you join the group www.mohawkforex.com and have me and the other guys as your mentor. Go. NAS back. Keep an eye on that. We'll trade this. I'm looking for the oil later on, which we'll be trading as well. The 8. Thank you everyone for joining me. We'll be back tomorrow for another live stream. Until then, trade safe, look after yourself, watch the charts, don't spend too much time, enjoy the sun and the weather if you've got it, and enjoy life. Yeah, we'll be back tomorrow. Till then, take care.